Stop scrolling. Just today, Trump announced a 50% tariff on Brazil and copper. Coffee prices skyrocket, copper shoots through the roof, and the dollar continued to wobble. With the Fed in a bind, inflation ticking higher, markets are absolutely setting up for a very powerful shift. Let's break it down. So first, let's take a look at Trump's announcement, a 50% tariff on Brazilian goods, and that's across the board, and copper. Now, all of this does take effect October 1st, but what happened today is incredible as coffee prices surged to $288 per pound, futures that is. Now, copper also hit a new record high, and mining stocks followed suit, with Freeport, for example, hitting 22% today. Now, if we take a look at equities in general, we're seeing a lot of resiliency here. The S&P hit a record high once again, and Nvidia just crossed that $4 trillion mark. An absolutely wonderful record here. Now, if we take a look at tariff and inflation timing, according to Yale or Budget Lab, added tariffs could increase consumer prices by about 1.7% in the short term, rising to as much as 1.5% long term, shaving roughly $2,300 off household incomes in the United States. But those inflation effects are lagging or do have a lag. We can expect the full impact of roughly 3 to 6 months from now, so late 2025, before we actually start to see the full impact of these tariffs. Now, if we take a look at the US dollar, the Dixie did drop below 97.50 again. Not surprising here. Expect a further drop, but it is technically temporary supported here as a safe haven demand continues to increase with mild Fed hawkishness. Now, meanwhile, the Fed does remain split on what they want to do as far as interest rates are concerned. Some are very hawkish, but some are also very dovish. They continue to juggle the problems with the tariffs, inflation, as well as possible recession risk. Now, a weaker dollar, something we always have to remember, does lead to more import-driven inflation. But the Fed has to be careful here. They cannot cut aggressively or they will risk an inflationary surge. Now, where is smart money starting to move? Well, if we're taking a look at equities in general, they continue to hold firm, but a lot of money is starting to flow into commodities once again. Again, coffee, copper, both skyrocketing today. Oil has been performing very well recently, attracting a lot more attention, and miners continue to outperform. If we're taking a look at precious metals, well, gold and silver continue to advance as safe haven hedges. In fact, RBC reported that central banks still continue to use gold as a major asset purchase. Now, let's talk about crypto here. Bitcoin today hitting 116,000 on a number of different reasons. And I do have an article here that we can quote. So as noted, this is on Crypto Briefing. It was noted that Bitcoin stability and institutional demand have remained strong despite heightened macroeconomic uncertainty and geopolitical tensions. Now, conditions under which most volatile assets would falter. But the key here is the maturity of Bitcoin. So for an asset once defined by volatility, this price consolidation over a significant period of time shows that Bitcoin is maturing. Now, this week in particular, Bitcoin has shattered expectations, evolving from a subdued trading range into a full-blown surge that culminated to a new high. Hence why a lot of institutional investors are starting to move back in. Now, if we take a look at bonds, yields are unstable, but volatility is making real assets look a heck of a lot more attractive, and that's why we're starting to see a lot more outflows from yields as well as equities and moving into commodities. And I anticipate that that is going to continue for some time. Now, what to watch for the next little bit? August 1st, we do have the tariffs that do kick in. Expect volatility in a lot of commodities, including copper and coffee as well, but also anticipate food prices could be very, very severely impacted. In September, we do have CPI and PPI, so watch for potentially a 1 to 2% inflationary bump here. That is generally what might be expected. That could be a major signal going forward. Now, if we're taking a look at the tariff deals, there are reports of a US and EU collaboration that could support markets here. But the Fed's tone is the most important because the minutes are what we really need to listen to because of this split between hawkish as well as dovishness. We really need to know whether or not a rate drop this year is on or off the table. That's it, everybody. If you want real-time intel on commodities, inflation, crypto, the Fed, stocks, subscribe now. We go way beyond the headlines and we try to decode where money is actually going in 2025, and we'll continue to dive deeper as we specialize. That's it for now, everybody. I'll see you tomorrow morning at the opening bell.